My dear students, today in the unit 2nd accounting process under the chapter recording of transactions, we are going to discuss accounting equation. The accounting equation always depicts the relationship among different components of a balance sheet, so it is also called as balance sheet equation. The components of balance sheet are assets, liabilities and capital. Thus, we can say that at any point of time, the assets of the business must be equal to sum of proprietor's capital and claim of outside liabilities. On the basis of this, an equation can be formed that assets are always equal to capital and liabilities. Then we can say that A is equal to C plus L. An accounting equation is a mathematical expression which shows that the assets of a business are always equal to the total of capital and liabilities. Dual aspect concept is the basis of accounting equation. Under the dual aspect concept, every transaction has two aspects. One is debit and another is credit. Dual aspect concept is the basic principle of accounting on the basis of which transactions are recorded in the books of accounts. The concept states that every business transaction has two aspects. One is debit and another is credit of equal amount. For every debit, there is a credit of equal amount in one or more accounts and vice versa. The system of accounting is thus called double entry system. And we can say that accounting equation is based on double entry system as well. As we know that dual aspect concept is the basis of accounting equation, under this concept every transaction has two aspects, debit and credit. It holds that for every debit there is a credit of equal amount and for every credit there is a debit of equal amount. It means that total claims, either they are internal claims or the external claims, will always be equal to the total assets of the firm. And claims of the firm, also known as the equities, they can be classified into owner's equity, also known as the capital of the business, and outsider's equity, that is the amount which is due to the outsiders of the business. On the basis of this, the equation has been formed. Assets are always equal to capital and liabilities. Now the assets includes the wealth or properties of the business. Whatsoever the wealth or property is in possession of the business, that will form your assets. And capital, on the other hand, is the amount invested by the proprietor or partners in a business enterprise. And liabilities are amount payable by the business enterprise towards the suppliers of the goods. Now, assets includes land and building, plant and machinery, furniture and fixture, motor vehicle, goodwill, etc. Whereas capital is the sum total of the capital, also the profits, reserves, retained earnings and gains of the business. And liabilities includes creditors, borrowings, bills payable and outstanding expenses, etc. The relationship between assets, capital and liabilities is known as an accounting equation. It is also termed as a balance sheet equation. An accounting equation is always holds true with every change that occurs due to a transaction entered into. That means whenever a transaction takes place, it will have effect either on assets, capital or liabilities. In that case, the accounting equation will always hold true. The effect of transactions on accounting equation. From the accounting equation viewpoint, the transactions can be classified into two main categories, like transactions affecting two items and transactions affecting more than two items. Now we will discuss these in detail. Firstly, the transactions affecting two items includes increase in the value of assets or increase in the value of liabilities. Then decrease in the liabilities and decrease in the assets. Increase in the assets and increase in the capital. Then decrease in capital and decrease in assets. So these are the transactions that affects two items. Now another category is transactions affecting more than two items. So here we will take an example. Suppose goods costing ₹5,000 have been sold for ₹6,000. Now this is a business transaction that had taken place. This transaction will reduce stock by ₹5,000 because when we are selling goods for ₹5,000 to our customer, definitely that will reduce our stock. So this transaction will have one effect on the stock, that will be reduced by ₹5,000. Another, the transaction will also increase the cash by ₹6,000 because the cash sales will result in an inflow of cash. So that will going to increase the cash. And if we are selling goods worth ₹5,000 for cash ₹6,000, so there is a profit of ₹1,000. This profit will definitely is a gain, and this gain will increase the capital of the business. So this transaction has affected stock, cash and capital accounts. Now we will just take an example to show the effect of transactions on accounting equation. The first transaction that we had taken, Suresh commenced business with ₹50,000 as capital. Here Suresh has started his business by investing ₹50,000 as capital in the business. Now this transaction has two aspects. One is the cash that has been invested in the business. This is an asset. So this will result in an inflow of cash. So this transaction is going to increase the assets in the form of cash by ₹50,000. Now since this is the investment in the business in order to commence it, this will be termed as the capital invested by Suresh. So this transaction will also increase the capital of the business, and liabilities will not be affected due to this transaction. Now the equation will be assets ₹50,000 are equal to capital 50,000. Liabilities are 0. The equation stands good here. 50,000 is equal to 50,000. Let's take another transaction. Purchased goods on credit worth ₹50,000. Now in this transaction, again two accounts are involved. One is the purchase of goods, that is stock. So this transaction will increase the stock by ₹20,000, and stock is your asset. So this transaction is going to increase the stock as well as the assets by ₹20,000. Now the total assets will be ₹70,000, including 50,000 cash and 20,000 worth stock. And these goods have been purchased on credit basis. That means the supplier of the goods have supplied these goods on credit basis. So this transaction will increase the creditors by ₹20,000 and hence liabilities will also be increased by rupee 20,000. Now on the basis of this, if we get a total of the total asset, it is rupee 70,000, whereas capital is 50,000 and liabilities are 20,000. So equation is satisfied in this case. 70,000 is equal to 70,000. So in the next video, we will discuss how to prepare an accounting equation on the basis of various given transactions. Till then, thank you.